Welcome to another episode. So, on today's show, we're actually going to talk about day trading. So, we're going to look at what day trading really is, what are the benefits of day trading, and also what are some of the risks involved with day trading. So, essentially, day trading really is just it's a very speculative type of investment strategy that some investors use, and the objective or the purpose of day trading is really to to speculate, and that speculation is done within a 24-hour period. So day trading can take place within minutes, within hours, but usually within a 24-hour period. So the speculations would mean that as it's one of the most riskiest types of investing, speculating, and speculating really is just purchasing based off what you perceive the market to actually do. So there's not really much facts or real information or anything out there to solidify your judgment for day trading, but for the speculations. But with experience, though, you would be able to pick up on certain patterns, and you know that when certain prices or certain stocks reach certain prices, you would know that then would be the best time to either enter or to sell off based on the patterns and the trends. So day trading takes into consideration current market situations and also historic information that has occurred in that particular industry, in that particular stock for previous times, whether weeks, months, years, so forth. So why does one actually do day trading? So as shared before, it's speculations. So the the most fulfilling or best rewarding types of investments, or one of the most fulfilling rewarding types of investments, is speculation. So when you do speculations, you actually tend to actually invest, and your investments actually tend to pay off a lot more than when you don't speculate. So if you do your necessary calculations, your research, and all of that great and wonderful thing, at the end of the day, sometimes you may have just missed that window of opportunity to make profits within a very short period or space of time. So once you are in the market for a certain period of time and you have built up that level of knowledge and experience as to how the market operates and how different factors and different things affect the market, then you can may want to try out the day trading type of investing. And so it's really just about speculating. So you see a stock at a particular price and you decide to enter into it with the mindset that you're going to be selling out of that stock within 24 hours. So that's really what it boils down to. So it's having that investment plan, having that strategy, having that mindset about how you're going to actually enter into the market, and then you actually just acting and working towards that. So with the day trading, it does take into consideration your technical and fundamental types of analysis. So it looks at different types of what's happening in the background and what's leading up, and it also looks at what is currently happening. So it also takes into the quantitative analysis as well too. So there's the fundamental and there's the quantitative analysis that is done, and so it looks directly at what's happening on the markets and also what has been happening in the company or on that particular industry leading up. And so with that, you look at additional market data such as your moving average, so your 10-day moving average, 30-day moving average, and you mix that with the fundamentals that you'd have, and then you throw in your speculations, and that's how you do day trading. So if you're considering day trading, some actual tips on how to protect yourself would be to actually set your floors and your ceilings. So when you're setting up your trading account and you fund it and you decide to enter a particular stock, actually set those stop losses and take profits. And a good tip is when you're taking stop losses, do about 1 to 2% in losses. So what that means is that if the stock falls by about 1 to 2% since what you have purchased it at, then the system will automatically sell it out. And you can set your price ceilings as well too. So based on where you perceive the market to actually go in the next few hours or within that 24-hour period, then you'd set your price ceiling. So whether it's 5% that you're looking to make in the 24-hour period, like 3%, whether it's 10%, you set that ceiling. But if you're going to be using the day trading strategies and fundamentals, let it be something reasonable. So within 2 to 5% is a good range to actually set up that. And so once you have actually entered into that stock and that investment, then you'd actually set it up in such a way that the markets would actually take profit within that 2 to 5% region that you'd have already set it up in. And if it's a case where you have seen where the stock is going fast and you have a feeling that you can get more than that, then by all means you are more than free and to actually invest and just go in blindsidedly without the ceilings protection, the take profits protection, and then you just make that sale based on when you think is a good time to actually sell out of the stock. So the day trading does have a lot of benefits, and it also has some risk involved as well too, because if you are purchasing based on speculation and something happens during the trading hours of the market, and a lot of times things do happen on the market and the market tanks or that particular stock tanks, you'd have lost a lot of money that you weren't willing to actually have lost at that period in time. And so that's where the stop losses would come into play, and so you would put your stop losses in. 1 to 2% is a good stop floor, but you can also do 5% as well too if you would like to actually expose yourself to a little bit more than that 1 to 2%, just in the event that the market would recover or that stock would recover before it actually goes down to 5%. And so that is also possible. And so as we actually wrap up this whole day trading, it's actually just the speculative type of investment that usually occurs within 24 hours. It takes into consideration both fundamentals and technical analysis, and so it also looks at market and quantitative analysis, and so it looks at the history of what's happening within the stock, the history within the industry, within the index, and also what is currently happening. And so you can also use your technical skills such as like moving 10-day and 30-day moving averages to actually use in the day trading. And there are also other types of techniques that traders use, but these are just the two that I chose to mention in this video. And so that really is it for day trading. So enjoy the investment journey, enjoy your time on the markets, and if you like this video, I'll ask you just to give us a thumbs up. on it. If you have any comments, share it down below. And also, feel free to subscribe so you do not miss out on any new episodes as soon as they are released. Thank you. Take care. Until the next time. Bye.